Hey traders, were you listening last week when I said, hey, watch out for this market because it's about to get dangerous? If you were, you avoided what took place in the market today as we crashed through levels of support and it looks like we're heading back for the bear market. In this week's session of Trade Your Way to Wealth and Financial Freedom, we cover not only that, we also have some excellent stock picks and even an ETF pick that could go up if the market's going down. Okay, let's get into today's session right now.
Hey, good afternoon, everybody. This is Dennis Wilburn, the AutoPilot Trader, and I want to welcome both Steve Ferrara and Anil Parikh to IBD Meetup Group Leaders. Welcome, gentlemen. Well, I guess the comments by Jerome Powell were strong, aggressive, and the market didn't like it and basically sold off. I mean, I was sitting there thinking as I was watching the strength in the market yesterday, are traders buying the rumor and they're going to sell the news? And it looks like the latter part of that happened. This is a reactionary move. I'm not overly concerned with it, but I do think that Powell, in his speech today, brought up the 1970s, which was a lost decade. So that, and one of the things we've been studying, my son has been putting together a study on, is in the 70s, from 1969 to approximately 1982, that 12-year period, if you would have put your money buy and hold into the S&P, you would have doubled your money by the end of that 12-year period. Not bad, right? Well, don't jump so fast thinking that's a great thing, because due to inflation, if you would have had $1,000 to start with and put it into the market, you would have basically come away with $2,000 at the end of that time frame. Due to the aspect in the teeth of inflation and stagflation, the purchasing power of that $2,000 was all the way down at $600. Now, Steve, Anil, and myself, we lived through that and we basically survived. And the question we have to ask ourselves is, are you inflation proofing or recession proofing how you're trading? That's a great question. And that's one of the things I wanted to jump into and ask some question of both Steve and Anil real quick. Put the disclaimer up there. Remember, all the materials we provide are for training purposes. Traders should always pay per trade any new method prior to the risk of their own personal capital. And shared this screen with you last week and asking the question, where are we at on this chart? I think we're down here in the approaching the fear level. And the reason I say that is because I don't really sense we've had a really strong enough capitulation. Jerome Powell stirring up the fear quotient. Are we going back into a situation like the 1970s? That could be very interesting if that in fact happened. But one of the things that I'm about to say to everybody, on the session today is, one, do not throw in the towel. Learn how to prosper in whatever conditions that the market provides us. And right now, the market is providing us conditions that you might go, I don't know what to think about that. But what kind of encouragement, Steve and Anil, would you pass on to people? Because you've lived through these kind of markets before. I mean, maybe not totally in the 70s. I don't know if you were trading that heavily in the 70s. What encouragement could you provide everybody?
I guess from my perspective, back over the years, I would say you need to have a long-term view about the market, like over a 5 to 10 year stretch. What do you think the market's going to do? If you're bullish, or you tend to think it's going to stay flat to rising, then on a daily basis, try to stay positive. Don't look at the down days and draw a big conclusion about them. It's easy to conclude from yesterday and then down today. So I should have sold it to yesterday's strength. But if you beat yourself up that way, you become unable to pull the trigger when it's time to take your setups. So I think it's stay away from the short-term assessments. Keep the long-term perspective in mind. I frankly think we're in a fairly good period of time right now. I think we're early in the takeoff phase.
Okay.
I think we've seen the capitulation. I'm relatively positive looking forward. There are a lot of things to be worried about, inflation, the Fed. I believe the Fed is going to muddle through. We've always muddled through the crisis in our country.
Okay.
So, you know, I think looking out will look okay. And so stay positive. And
so let's jump over to Anil and see what he has to say.
I think what I have learned over the years is figure out what's your best system and then just follow the system. Don't let the market scare you one way or the other. Whatever the system says, do.
Yep.
And
I love that.
I'm not trying to kind of say nice words about your system, but I think the autopilot system that you're following and buy the pullbacks and then discipline selling as it goes up, I think it's a great system.
Oh, thank you, sir. Appreciate that. People listen and they hear, you know, may hear Steve and I going at each other, or they Anil going at it, and we're going at it, and it appears as if we disagree, but you don't understand that that's okay, because the fact of the matter is each one of us is flexible enough that if the thesis that we have for market conditions and which ways it's going, we're flexible enough to change our thesis as the market dictates. You know, we have a lot of respect for each other. The thing that, with what Anil had to say, reminds me of the Jesse Livermore quote, "Every time I lost serious money, it was when I disregarded one or more of the rules of profitable trading." So remember that. It comes down to following your stinking rules. Hey, let's jump into today's session. And we'll continue on. We need to stay on track. And so here's where we're sitting as of about 9 o'clock this morning. Here's where we were last week. Very, very pleased. As you can see, last week, the NASDAQ and the Russell slipped back into bear market territory. They stayed there as of today. Active trend trading, really pleased. We're bumping up against 40%. That's, again, is my target for the year. We're beating the S&P by 51%. So I'm always pleased when we're beating the heck out of the S&P. And we've done that basically every year for the last 12 years. And so we continue to work on that. So let's go ahead and jump in and let's take a look. I think people said they really liked what we did last week, guys. You guys presented your stocks. So we're going to start today with Steve. Steve, I've been following this stock also. I like it, but just walk us through what you're going to do with it, where you're going to get in.
Okay. I don't like today's action particularly well, but I like the pullback we had. It was fairly orderly. I like the decline in volume as we pull back. We're holding a logical place, I think. And I would be long above today's high.
Okay.
Today's market weakness surprised me a little bit. I suspect it's a one-day event, and if we're up on Monday, it's time to enter.
Okay, cool. So breaking back above the 8 and the 20 here, and above today's high, you would be into this, and then a stop just slightly below today's low.
Yep, just under today's low, a couple of pennies. Yeah.
Okay, and I want to highlight this to folks. If you get in just slightly above there, you're only talking about less than 3% that is risk. So that's an excellent reward risk ratio, because his upside is at least back up to these highs back here. And as you can see, that would be approximately about an 8-9% gain. We're sitting there with a 3-to-1 risk reward ratio. So I like it. And this is Synopsys.
Yes.
Again, I've been also stalking this one, waiting for a right entry on it. Go ahead.
I'm sorry. I was planning to enter today, but with the weakness in the market, my stop entry.
Yeah.
My stop did not trigger.
Okay. And again, waiting for the price is king, waiting for that reversal and turnaround. Okay, DVN. I like this is in Devon Energy. Is this an oil patch, or is this
So it's oil and gas production.
Okay.
Yeah.
But it's an emphasis on gas. You're more a gas seller than.
Okay. What's the story here, Anil, and where are you going to enter? Where are you going to exit?
The story is I'm following my triple screen system, and because it's a very rigid system, it's you can always back test, and the back testing gives a very high batting average, very high risk reward ratio, and a weekly triple screen signal has triggered this week.
Okay.
And it's in Market Smith Growth 250. So everything's positive. So hence I picked the stock.
So I like it. I mean, you got your momentum shifting and heading up. So it's still early in the momentum phase. You may get a little bit of a pullback, but what would be a reasonable pullback here? So even if you drop back to slightly below so are you buying right here?
Yeah, I'm buying right here, right now, kind of.
Okay. And you can still maintain a 5 to 6 to 7% stop loss on this.
That's right.
Where did that come from?
Okay, that was a trade on SOXL as it's falling. I had some puts active on that. DBN, again, I like it. Of course, I would be doing the pullback on it, you know that, but it looks really good. Oh, the other thing that struck me about this one, Anil, really excellent volume. I mean, that's huge volume, and on average, 7.2 million shares per day. That's amazing.
Yeah, I didn't notice that, but you're right.
And so, okay, let's go ahead and jump over into the indexes really quick. What are the indexes giving us, or what are they taking away? Let's go ahead and take a look here at the S&P. I've got good news, I've got bad news on the S&P. One, this is a classic zigzag type move. We pulled down, took out the swing low right there, so it's a new lower low. Now we bounced back up. It failed to get back up into these areas here, so we have a reversal bearish type failure, and now we're falling back down. The good news is, will it stop at the 50-day moving average? Like right now, we do not know. If you'll recall correctly, last week I drew in this little purple box here, and that's kind of the magic fib box of where it could go based on a move from this low to this high, and that was the 1/3 to 2/3 retracement that Charles Dow talks about. So for me right now, I don't touch this to the long side until I get one at a level of support, which I'm at right now, a bullish candlestick reversal signal, and my TSI, or my momentum, shifting up to the upside. So that's what I've got on the S&P. The other side of that coin is if my weekly TSI, my momentum shifts to the downside and crosses to the downside, I will look to for bearish trades, and I take out the 50 here. I'll look for bearish trades on S&P. So that's what I've got. The spiders. NASDAQ really breaking to the downside. As you see, it is breaking below the 50-day moving average. A trading tip for everybody, though, is where we've got about an hour and a half to go into the trading day. If it doesn't close below the 50-day and bounces back up into the midsection of today's candlestick, I could interpret that as being a positive move, and so that there may be a reversal in the offing. Additionally, the other thing you can do when the market is doing the correction, if you don't want to trade to the downside, is practice on sharpening your saw. Notice what happened right here. We had a momentum shift, looked like it was going to cross back up. In fact, as of yesterday, it had almost crossed. Today's price action resulted in it not crossing, with the TSI over here on the weekly chart almost crossing. But that is kind of what I call a bearish squeeze on the TSI, on the momentum. And oftentimes it can be a fake out because a lot of times people will take that as a position to trade and then all of a sudden, pow, get knocked down after the fact. So that's what we've got with that. Russell, way above the 50-day moving average. So I'm going to be keeping my eye on that. It is coming into a level of past support, okay, from these candlestick here. Now, if we break through that and then fall down in this area, where's it likely to go? Well, look for a retracement down into the magic fib box here. This is from this low to that high. And the top of that fib box is at 187, and we're $3 away from it right now. As of right now, last week, we had a bearish Harami, followed with a downside break this week. TSI, again, it hasn't crossed over yet. So I'm getting mixed signals here. My weekly longer term hasn't absolutely crossed over. My daily momentum hasn't crossed up either. And so which one's going to happen first? I don't know at this time. I have to wait until the markets confirm that. I would be looking based on this big red candle, though. Look at the middle section of that candle for downside trades on IWM, and or I would be bouncing over to the leverage ETF. So, guys, that's what I've got. I mean, for me to be active in any of the three indexes, I need a signal. What are your thoughts?
I pretty much agree with you. And today is an ugly day, but the thing I noticed about today is the volume is not high. We're under average. It's over yesterday's volume, but we're not even at average volume for the day.
Yep.
On pretty much all the indices. So I think it's just a reaction to Powell, and it may be an overreaction, and it's not led to a real strong sell-off.
No.
Although it looks ugly as hell.
Anil?
We'll have to see what happens on Monday.
No, I guess this is just a wait and see day today. This maybe looks to me it's kind of an overreaction today, but
that's where it could be an overreaction. I'm down with that. It could be an overreaction. I'll be watching if it fails next week at the 50-day moving average. I won't know exactly whether or not I get a crossover here or not. But I have defined where I would be interested in a potential trade to the upside on IWM, which is down in this box right here. It may get there. It may not get there. That's where I'm looking for my trigger.
Dennis, just a point of clarification. I'm curious, what is your 50-period moving average? Is it a simple or an exponential moving average?
It's an exponential. I use my 8, my 20, my 34, and my 50 are exponential. My 200 and 100 are simple.
Okay, thank you.
Let's jump over to my pick for today. I am looking to trade SPXU. Now, SPXU is the leverage ETF, inverse leverage ETF of the spiders. It's a 3-time leverage. I'll be watching this. It's showing me everything that I want to be looking at. The TSI on the weekly chart has just about crossed up, hasn't totally crossed up. I am getting a little bit of a pop in volume where people are kind of hedging their bets. And so how would I like to trade this? What I like about this is I would look to trade this on any kind of a pullback to about $15.08, $15.10 maybe. And then my downside stop loss is going to be below today's low at about 5%. So that would be my trigger to look at a trade on that particular entity on SPXU. So that's my pick going into next week. I'm not going to buy it where it's at. I want to see a pullback into the midsection of the candlestick. And why is that? Is oftentimes when you get these big candlesticks, you'll get a pullback into it and then a bounce up. The second thing about it is it's bumping right up against a moving average. And so that oftentimes, why buy it there when I can be looking at here and then have it ram forward above that? So there's my pick, guys.
Looks good.
Looks good.
I don't nothing to say negative about it. I think it's
okay. So, okay, guys. And so let's go ahead and just finish things off today.
Dennis,
So,
I just thought of something, just a general comment to comments you made earlier.
go ahead.
Sometimes we appear to really disagree, but I
Yeah.
think in general, we're really coherent. We're not that far apart.
Oh, I know. It's just,
Even though sometimes we seem that way.
no, and the thing about it is that the people got to realize is that, as we've said in the past, you get 10 technicians in a room, you get 15 different observations or something like that.
Yeah, at a minimum, maybe closer to 25.
Yeah, and the thing that I just want to point out to, it's not an issue of who's right, who's wrong. It's the issue is, do we have the flexibility to go with the market? Have we learned how to pay ourselves profits in this market and market conditions? And I know, speaking for myself, I have, and I am flexible enough to change. And so, okay, I need to go this way now, and it's okay.
Yeah.
Because we can get hard over on thinking. That's one of the biggest problems that a lot of new traders have, is they basically have an ego that's larger than their brain.
Yeah.
And they think that they know what they're doing, and they will hold on to that. I think I know what I'm doing, or I think I am right. I have to be right. And especially if they're trading something like options, and options will rip your face off if you have that kind of attitude where you're not willing to modify things.
Agreed.
Okay, here's a quote I found from Warren Buffett. I thought this was absolutely amazing. Diversification is protection against ignorance. It makes little sense if you know what you're doing. So that's kind of interesting. So, hey, TQQ, you guys know I love trading the leverage ETFs, and we offer a special service, the AutoPilot Trading Service, to, in fact, trade this. What I'm after is looking for multiple opportunities during the year, and we look at those with laser focus, and we've learned to fish where the big fish swim, to pick up larger returns, and also which impacts and improves our compounding significantly. So if you want more information about the AutoPilot Trading Service, just go to this website down here, and it'll also be in the link in the comments when I send out the link, and also comments over on the YouTube channel. I want to thank everybody for joining us over on the YouTube channel. I want to thank Steve and Anil for a fabulous, good session today. So, and thanks for your basically your encouragement to folks on what to do. You know, my biggest thing is just don't quit, don't throw in the towel, because if you do that, oftentimes you can't capitalize on all the great training that you've had in order to be profitable going forward. So, Steve and Anil, have a great weekend.
You too.
You too.
And we'll see what Monday brings. So, aloha. God bless everybody.